All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Just doing a quick audio check. Apparently last live stream was missing audio here. Everything's right on my end, so they're checking a few things. So just jumping on, see if the audio is working. And if I get the heads up or the thumbs up, then we'll proceed here. Hopefully get the thumbs up. Perfect. All right. Thanks, Jason. All right. So anyway, market has, gone into a little bit of tailspin here this afternoon. And you can see this kind of breakdown right here. Market's sliding, about 50 points, in about a half hour. This is on some comments from one of the bond gurus out there, or major bond guys, basically saying, look, the inverted yield curve means recession is coming. And, we talked about the yield curve in the last video and all of that, but his comments are what are sparking it. I'm not going to get into the facts of the comments and whether or not he's right or wrong, because frankly, it doesn't matter. That is what is spurring the market on this next move. On this move. Now, we had an 18K volume right here. I don't read anything into that. That's not bottoming volume. That's breakdown volume. But this 20K volume, I do read something into that. The chance of the market closing below this level, this kind of 27.24, 27.25 level, is very slim. Yes, the market could go and trade below that level before the close, but chances of closing below that level, fairly slim out there. So, small caps really getting hit hard. Transports getting hit hard. Out there, along with the banks, and they tried to hold up. They had tried to find a little support level, but they just got taken out again here on this last drop. There's very little being spared out there. Your Verizon, your Pepsi, sure, but very little being spared out there. This is not a differential sell-off, meaning. This isn't investors picking and choosing what they're going to sell. This is everybody out of the pool. This is just sell everything. Get out. Gotta go. Where do you put your money? You put it into bonds. And we see that rotation where bonds getting bought up, stocks getting sold here today in a very big way. Not a little way. In a very big way, on some big volumes and on some heavy fears, right? And you think about yesterday and where things were, and what things were, and how quickly it can change, right? How quickly it can change here, and we see that coming into the markets today. Now, for the challenge, I've been all cash, and we've just kind of been stuck in that 2,700 to 3,300 level. Really haven't had any material gains or material losses to really, be game changing one way or the other. Something where I look at what's out there today, and there's a reality that I have to face, and that is that most of the stocks on my watch list triggered bearish here this morning. And one of the things that I did yesterday into the close is I went and bought some Bank of America calls. And, what did that mean? Well, I even mentioned yesterday that if it gaps down today, I've got to go. And great, I was able to go and get out here. But the reality is I wasn't able to go and get into some puts here this morning, like I would have preferred. Now, some of that is not, most of that it has nothing to do with not getting the signal, has everything to do with, once I got out of Bank of America, now I'm looking and I'm going, okay, Micron, can I get this? Maybe I can get a little better price, maybe I can get a little better price, and boom, before I know it, I can't. And so it, just absolutely takes off on me, and I wasn't willing to chase. You can say in hindsight, yep, should have chased, but a lot of the stocks on my watch list in terms of the hourly charts, triggered bearish this morning on the gap down. Micron, Bank of America, Microsoft didn't trigger bearish this morning. It triggered bearish while I was on the last video, broke down below the 7 hour moving average and pushed on down. But this is one of those where most of those that triggered bearish this morning, they're getting oversold to a point where it's not a good risk reward right here, but they're not oversold to a point where it's a great buy. And what do I mean? Well, let's take a look at Micron. Here's the hourly, and it's down, 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 but we're nowhere near oversold on our CCI or our MFI. That would suggest, hey, you know what? This is a really nice area to pick it up. Yeah. Could I go buy some and play a 50-cent bounce into the close? Sure. But I might be buying them, riding 50 cents lower, and then hoping for a 50-cent bounce into the close. There's just, there's nothing oversold enough here, to prompt me to jump in. And this is what a lot of hourly charts out there look like. The lack of differentiation on this sell-off means that most hourly charts look identical. Which means what? That if I'm going to make a play, I've got to have in mind what the market is doing or going to do. There is this class, though, of stock that has a little bit of a different look to it, okay, in terms of the technicals and in terms of the chart. Here's IBM. And you can see the move here on the hourly, and we're down to the lower Bollinger Band, right? But you compare this to something like a Bank of America or a Micron that's just lambasted here today. Is that a word, lambasted? Just getting plowed under here today, breaking that lower band. Just no buy in sight here today, and actually starting to get a little bit oversold. Not oversold enough, but starting to get to the point where it becomes a little bit interesting. But you take a look at an IBM coming down to this lower Bollinger Band. Okay. I don't have to go pick it up right here. And I'm not going to pick it up right here because we're not oversold enough, for me to say, hey, I expect that this band is going to hold. But oversold enough that if it stabilizes a little bit here and we start to see that next move back above the 7-hour and the stochastics back above 20, great. I can go out and be a buyer and jump on in. And, IBM's not the only one. Under Armour is doing the same thing, right? And Under Armour, this has been a really good stock. It's had a really nice run here. And looking for basically the same thing that I got last time I played Under Armour, that fresh move back above the 7-hour moving average. And if when I get it, we'll look to take advantage of it, provided that it holds these current levels. And even Microsoft to some degree has had a similar chart, but the bands are a little further apart. But that same move, these aren't these mega breakdowns like what we see in the FedExes and the Bank of Americas and in the in small caps in general, or the Microns. These are stocks that on a relative basis are holding up extremely well here so far. And if the market does say, hey, you know what, it's going to stabilize and bounce here, we'll probably see these stocks outperform and push on up. But I don't have a buy signal on them here, just yet. A Visa, same type of thing. They are still all in fairly bearish modes here on the hourly charts without a lot of differentiation on them. And so if I'm going to go and play something into this afternoon, my most important chart isn't going to be the Microsoft chart or the Under Armour chart or the Micron chart. It's going to be the S&P chart, right? And what the market is doing, and more playing that. And yeah, I could go play an Apple or something like that, and play a bounce or further drop with it, but most things, there's not going to be a lot of differentiation. It's going to be, hey, as goes the market, so goes Apple. As goes the market, so goes Microsoft, and all of the rest with very little differentiation. Maybe Pepsi, Verizon, or small exceptions there with that. But in all, and this isn't a day. This is not a day that. This is not very similar to any of these sell days right back here. I don't think we can call today, or say it has any similarity to these other days where the market has sold off. This is a day today where there is there is a fear rotation that is palpable, that is aggressive, and it is sell any and every stock you have and buy bonds. And that stock bond rotation that has kind of gone away overall for the last several years, we're really seeing that come into play here today, and it is something that's very reminiscent of some of the moves back in '07, 2010, before the Fed got too deep into quantitative easing here. So that's the rotation that we are seeing. We are seeing the VIX, which, when the market was just down about 20 points, the VIX was barely higher. The VIX was barely higher. And then it just has taken off here in about the last hour and a half. That's helping to push the VXX up sizably here today, though still lagging the VIX on a percentage basis, which I think is interesting. But anyway, that's what we're seeing here this afternoon. I mentioned this morning this could be a very interesting day, and just because we do not see the market closed on Wednesday very often. And the markets are closed tomorrow. So, this almost has a weekend, going into the weekend, don't want to hold anything type of feel here to it today. But the markets will be open Thursday and Friday. And so very unusual to see this. We don't get this very often. Sometimes when 4th of July, comes midweek, or Christmas midweek. But even with Christmas, there's a half day for New Year's, and volumes tend to be really light. This has a lot different type of feel and look to it than what the market as a company is accustomed to. Now it looks like the market's just simply responding by saying, "Hey, you know what? We're going to sell first, ask questions later," and it's something where I would not be surprised to see a little stabilization come in Thursday, Friday, but see a little more selling come in here this afternoon. Okay, so bottom line, I don't have my finger on the trigger to buy anything here right here. If we start to see the hourly switch a little bit on Microsoft, Under Armour, IBM, I'll take a look at those. And see where they sit, but most of the put opportunities on this move, for me, are too oversold at this point. They're not oversold, tremendously enough to buy, but too oversold for me to step in. So I will be waiting for the next, for the next batch, which could come as early as this afternoon, or even Thursday morning. But we'll see how things transpire there. As far as the market internals here today and how they're moving, you take a look at the bullish percent index. This has moved strongly bullish. And it's barely budging lower today. Now, this will change by the close a little. It will definitely change by the close, as a lot of the point and figure charts are based on closing elements. But even with a shot down, it's not going to be in a bearish position. You take a look at number of stocks trading above and below things like the 7-day moving average. Let's see here if I can pull that up. There we are. You can see that we still have 219 stocks above the 7-day moving average. That's a bearish whipsaw, right? If we go and we look at yesterday, in fact, let's see if I can pull that up. Let's come in here to edit scan, and let's just come and look at this 1 day ago. $449, right? So we are seeing more than 45% of the S&P stocks crossing below their 7-day moving average. That is a pace and a velocity that we tend to see when the market's going from bullish to bearish, or we see it in the other direction when the market goes from bearish to bullish. So it's a really strong pace or really strong velocity there. If we look at this for 20-day moving averages, let's see here. Yesterday, now run scan, 400 above the 7-day moving average, right? And today we have, let's go 0 days and 0 days, run that, 253. right? So about 30% of the S&P moving below the 20-day moving average. This is not overly bearish. It's not, it's not bullish in any way, shape, or form. But it may ultimately mean a bearish signal on the market vibe by the end of the day today. But as it sits right now, still a little too early to call with 3 hours left to go in the market and seeing some of the bottoming volume already here. So it tells me that we're going to have multiple 20-point chops here before the close, and we could see some interesting fireworks before it's all said and done. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.